everyone, and thank you so much for coming to our November Network and Learn event. My name is Marita Rosen. I'm a CPA and a CGMA, Chartered Global Management Accountant, an experienced CFO, and an auditor. And I really, really appreciate you coming here today. So I hope you enjoyed the hors d'oeuvres, and we're going to now just take a few moments just to go over a little bit about why you should know the value of your business. So before we start, I wanted to ask this brief question. What is the biggest investment that you have made in your life, and how did that affect you? Any thoughts? What was the biggest thing that you made? Yes, sir.
A house.
House, yes. What else?
Car.
Okay. What else?
My education.
Your education, yes, and that's one of the biggest things that we could invest on, right? Investment in knowledge is the best investment we can make. Thank you. Another question for you guys. How many of you think that business owners, or what percentage of business owners you think know the value of their business?
5%.
Any other guesses?
23%.
All right, let's check it out. Well, only 2% of small business owners actually know the value of their business. So that means 98% of business owners actually do not know this. And that's very serious, right? Because imagine that, you know, small businesses are the biggest component of our industry, our economy. So imagine they don't know the value of their business. They go out and get insurance, they go and try to do their retirement, their estate planning, and they do not know the value of their business. So the next question is, and this is why I want to make this a little interactive, is like, why would you think that a business owner would not know the value of their business? What's holding them back? Yes?
Too busy trying to grow their business.
Okay, yes, yes. Sometimes they get so busy, they get overwhelmed, they have already so much to do, they got to do marketing, they got to do sales, operations. There's no time for figuring out the value.
Yeah.
Sure thing.
It's also very expensive.
Very expensive. Absolutely. Absolutely. And there's more, right? So traditionally, yes, it is very expensive to do business valuations. It could take anywhere from 10,000 and more. It's also time consuming. It could take more than 4 weeks sometimes to do business valuations. And like you said, as a business owner, you're already busy, but they require a lot of documents from you, and you have no time to put that together, so it becomes super duper complicated. And of course, you know, most business owners will be like, it's not the right time. You know, there's nothing happening right now. I'm not selling my business. I'm not ready to leave. So there's no specific event that's making them consider doing a business valuation. So when is the right time to know? You know, it's how to grow and how to reconstruct, or when to sell the business. When would be the right time to know?
Wow. That's a good question.
It's any time. Any time is the right time is the answer. So let's talk about the key benefits now. The key benefits are, one of the things is net worth, right? So the more you understand your numbers and the value of the business, the better you understand your net worth. Where do you stand? You know, the value of your business. When you want to go out and get protection for your business, it's important that you know the value, and they are using that value to give you the right coverage, right? You're not under-covered and you're not over-covered. So you're not paying too much or you're paying too little for the right coverage. And then planning for the future. For example, if you want to get a retirement plan set up, or you're setting up for an estate plan, it's the same thing. If your business is your main biggest asset, you want to make sure that you know the value of your business. You want to make sure that you have the correct numbers. Of course, when you're growing your business, you want to make the right decisions. To make the right decisions, you want to know your numbers. To know the numbers, you want to be able to run a business valuation. And of course, understanding the ways to increase the value of your business is by knowing your KPIs. And it's something we're going to talk in a little bit. So a business valuation can put you ahead. Are you ready to understand your business? Are you ready from your professional and your personal and financial goals? Are you on track? What do you think?
No, I'm not.
Okay, so this is what we do. We use actually a software that uses big data to put together the business valuation, right? So the software uses 25 data sources and with 900, just to make sure I say it correctly, NAICUS codes to provide a more streamlined, reliable, and sophisticated, accurate business valuation. So, we are using software that is very intuitive. It's collecting a lot of big data from a lot of information out there. That would be very, very hard to collect if we are doing it manually. So the software will actually help us put it all together. So obviously this is a complex thing, but we'll keep the complexity in the software. The software uses a 7-step process, and it is a patented algorithm that uses a method for the market, asset, and income approach, which is also endorsed by the Association of Bankers. So I want to go into a little bit of the details that you do want to know. So the software goes into, it provides 4 different values. One of them is the equity value, and this is the most important value because it actually is taking the asset and the liabilities and giving us the actual equity value. So if someone is coming in to buy the company, that would be the true value of the company. The asset sale value, this is a situation where the seller is keeping the cash and accounts receivable, and the only thing that is getting value is actually the inventory and the fixed assets. So it's only the asset value. It's not taking into consideration anything else. No liabilities are taken into consideration. Then there's the enterprise value. This is something most people know of, the EBITDA, the earnings before interest, depreciation, and taxes. But with the enterprise value, this adds on the liability, because if we're looking only at EBITDA, we're only looking at a profit and loss, kind of like backing out certain things. But with adding the liability, it's going to give you a much better, more robust number to look at. And then, of course, the liquidation value, which is the 4th one, that would be if your business had to liquidate right now to pay bills or something, that things are just not working, you want to liquidate right now, what would be the value? So this is a lot of information. And at this point, a lot of people ask questions. So I know the questions are in your minds.
Why did you say the equity value is the most important?
The equity value really shows what the shareholders' equity are. So it's not just an internal number, but it's like shows what would be paid, like what would a possible shareholder, person acquiring the business would be willing to pay. So what would it be, that value? So we'll take the assets with the liabilities.
Gotcha. So if someone's interested in buying my business, I need to know equity value?
You should definitely know that. So, and this is one of the newer values that they're inputting. Yes. So with all 4 of the values together, I mean, you're getting a lot more, right? So you're seeing a lot of different pictures based on what is needed for your business at the moment. Yes. Different approaches, different buyers, what they're looking at, Yes, ma'am.
In what case would I want to measure my enterprise value?
In what case? In all cases, we should be looking at all of them, but each one is going to give you a different way. So each buyer is looking for a different value. So one buyer might be taking, their risk assessment is different. They might want to look at only EBITDA. Another one would be looking at the enterprise value, which does take into consideration the debt, which is important, right? Because the buyer may be taking over the debt. So they want to know how much debt you have and what that value will represent.
Which one of the evaluations would take into consideration any back taxes owed?
The back taxes owed, that would be within the EBITDA, because we're looking at taking into consideration the taxes. Awesome. Good questions, guys. If you have more, you can also ask me afterwards. All right, let's keep on going. All right, so part of the report, which by the way, it's a massive 29-page report that we provide. So it also provides you this type of a scenario where it tells you, for example, based on the industry comparison, where you stand. So you're either doing better or worse or similar to the industry. So it could be based on different KPIs. You could be doing better or worse. So with that, then we can focus on what is it that you need to work on to do better. So this is a great way to help grow your business, and that's where we kind of come in and use it. So which I'm going to talk about in a little bit. So what are some of the key performance indicators that we cover here? Part of the software, there's about 13 of them, and I'm just going to go ahead and read the return on equity, which basically looks at effective use of equity, interest coverage, income to revenue, the receivables conversion, which is basically how fast receivables are turning around, inventory turnover, that means if you have inventory, how fast you're turning them over, how fast you're selling them, debt to equity, fixed assets turnover, and cash to debt. So these are different ratios that the software actually will bring it out, and then it will tell you if you're doing average, below, or better. So this is a very extensive report that the software will help us put together. Another question. Would you want to know how we really use this software as part of our system of helping our clients?
I would love to.
Yes, awesome. So this is something based on my background as an auditor and a CFO. When I found this software, I thought this is excellent. This is a great way to provide the basics, the base level for a client. And so I put together this very unique framework that I call VALUEATIONMT. And so what I do is I start with a valuation to just get a basic idea of where the client's accounting stands, their financials, where they stand. Then we go through a full financial analysis and make sure they're accurate, the numbers are accurate, because if the numbers are not accurate, we can't really work with them, we cannot, we have to fix them, right? Then of course, cash flow management. This is something we hear all the time, like we have to leverage cash flow, we need to time when we're paying, we need to time when we're actually collecting, we cannot delay collections forever. What are the key things that we're doing? So cash flow management is a key piece that we want to work on. So from a revenue standpoint, we also look at how are the prices set up, right? So we use a lot of times we use value pricing to put and value pricing strategies to build the revenue base. So the pricing will be different. Then of course, as many businesses, once they hit their $1 million, they start growing fast, but they don't put on the right policies and procedures. So then literally the business owner could be doing multiple things, but there's no actual segregation of duties, there's no actual processes. So we go in and write up the walkthroughs and then put together the right processes, so there's a chain of command. There's the authority who's signing on checks, who's authorizing certain things. Of course, we analyze financial data. We'll start looking at comparatives now month to month, because the business valuation was only the basis. Now we have to look month to month what's happening, so we can actually start building out a full picture of month to month what's happening. Of course, as we're doing this, costs. We're going to look at costs. We're going to look at vendors. We're going to look at contracts. What is happening there, and if we can cut down costs, that's what we're going to do. Increase profit drivers. Again, as we're talking to our clients, we'll take a look at where are the different incomes coming from, what kind of products, what kind of services, is there something else they could do? So those are different considerations we'll also look at. Operating effectively and efficiently. Again, as I said, this is kind of ties in with the building policies and procedures, and that's because if you build out your operations correctly, then you're building also the efficiencies. The processes and operations kind of go hand in hand. Of course, as we're putting all of this together, we build the next projections for the next year, 2 years out, build the roadmap, and then start monitoring actuals to the projections. And this is how we transform the business owner's personal and professional financials. And so yeah, and this is how we basically use business valuation as a basis and turn our clients' lives around. So what would it be worth it for you to know the worth of your business? Is it something you would want to know now?
Oh, yes.
Yes?
I'd rather know exactly and not estimate.
So to thank you all, of course, with the time you spent to come down today and spend time with us and learn about business valuation and how really, really it is important to get to know this number. And of course, this number needs to change, right? We want to make sure that that number is current. We did put together a very special offer for you today. It includes an initial valuation with a meeting to discuss the report. So we will sit down with you and go over the report, because we can't just give you a report and say, hey, figure it out. So we'll sit down and do the report with you, and of course give you a whole list of things that you need to work on. And of course, at that point, if you want to engage us for additional work, we're happy to do that. So this offer is worth $8,000, and for today it's a 25% discount if you want to sign up. So, but I want to leave you with one quote, which I really, really love, and it's two of my mentors that use quite constantly, and it really has impacted me as well, is, in the words of the motivational speaker Jim Rohn, you are the average of the 5 people you spend the most time with. So my question to you is, who are in your top 5 people that you surround yourself with? Thank you again so much for coming down and hanging out with me. And